Hello, Business 635 students. This is Professor Hassey. It's our Week 6 introduction video. And our topic this week is Capital Budgeting Risk Analysis Part 2. We're going to be looking in detail about the scenario and sensitivity analysis for capital budgeting. We're concentrating this week on our spreadsheet that we begun in class last week. And here is that spreadsheet here. It is in week 5 and 6 in class file folders, so you can download it if you have not already done so. If you remember last week, we completed the base case analysis determining the return on investments of a $1 million project. This week we're going to look at the risk analysis tab of this spreadsheet, which is the determination of scenario based on output or units sold per year accordingly to an average, which is our base case, a strong or weak economy. Then we're going to take a look at sensitivity analysis, which takes a look at key variables and how they are affected if they go up and down in value individually, and how that affects the net present value return on the investment. In this problem, we're looking at selling price per unit, variable cost per unit, and WACC, and we'll discuss this in class as well. Here's the reference page to week 6 of our Blackboard. In addition to talking about risk analysis this week, this is what is called Articles Week, where I have 4 articles in Blackboard that I'd like you to read this week for our discussion in our lecture class next Monday, July 20th. So please feel free to download these and read them. They refer to the electrics case, which is your capital budgeting case, that I've been posting tomorrow night before class. That's your capital budgeting case due August 16th, and we'll discuss that in class tomorrow night. Also, for some of you, this might be an interesting video to watch, How the Economic Machine Works by Ray Dalio. Mr. Dalio is a hedge fund investor and a very successful one. This is a nice video, though it is a few years old. It gives a good explanation of how our economy works, and for some of us in class that might be a useful tool to understanding the concept of capital budgeting. In addition to this, you have your case number 2 to be posted this evening. Please do so. Any concerns or questions on that, I am available today to discuss. And finally, I'd like to look at a video for this week which talks about, this is earnings season. The quarter ended last week, June 30th, and in the next week and 2 weeks is earnings season, which is the basis of all strategic decisions, how much profit you're making and the prospects for profit in finance. So let's take a look at this for the earnings season for this year.
Earnings season is going to be the next big hurdle that this market has to jump. Q2 earnings estimates are on track for their biggest decline since fourth quarter of 2008. And it's going to be the second straight quarter of declines that we're going to see. Let's bring in a couple of investors on this. David Katz, Chief Investment Officer with Matrix Asset Advisors, and Dan Suzuki is Deputy Chief Investment Officer with Richard Bernstein Advisors. Good to see you both. Thanks for joining us today. Dan, what are your expectations? I mean, are we going to see any positives come out of this season of earnings or not, do you think?
Well, it depends on what you're looking at, Bill. I think if you're looking at the numbers that these companies are reporting, you're not going to see any positives. I mean, we all know, having looked at all the other data out there, that the second quarter earnings season was probably miserable. But it's a bit backward looking to focus on that number. So I think where the positives are going to come from are companies telling you that things were miserable, but that things are on the upswing right now. So I think what's less important for me is the numbers that they post, but I'm curious to hear how they're going to balance, sort of the focus on preserving cash and cost cutting and profitability in 2020 versus investing for growth in 2021. If they're more focused on the former, then I think that's actually more of a negative for overall S&P earnings as a whole. But if they're more focused on the long-term and growth and preserving their employees and spending on growth, I think that's a little bit more bullish of a growth signal.
David, what about you from the value standpoint? What's the theme that you're looking for this earnings season?
Well, we agree with Dan. We're expecting a fairly miserable earnings season, but it's critically important to put it in perspective. Last quarter's earnings were poor, yet you had a great stock market. We think the market is going to focus less on this quarter's earnings season and more about what companies talk about for the balance of the year. Are their balance sheets good, and are they seeing demand pick up? We think the market then starts to look toward 2021, and that should allow for a pretty reasonable stock market. So we're not expecting the current quarter to be particularly good or bad in terms of moving the market. The actual earnings will be poor, with certain sectors being worse and a few sectors being outliers like consumer staples on the positive side.
I think we're all in agreement that the backward-looking numbers aren't very helpful. It's the forward guidance. But Dan, how confident are you going to be that companies are actually able to give guidance, particularly towards the third quarter? I mean, we're at a critical juncture where at the end of July, the extra stimulus checks to consumers comes to an end unless another fiscal policy round kicks in. I mean, there are things that are just sort of still unknown about how it'll impact consumer behavior. And so therefore demand, we could have seen that pick up, but we don't know what it's going to be in August or September.
Exactly. If you're going into this earnings season hoping for a lot of visibility and color from company guidance, I think that's a bit hopeful in my perspective. I think that what you saw last quarter is that everybody cut their guidance because of all those uncertainties. And to your point, what you were just mentioning, a lot of those uncertainties haven't gone away. In fact, to what you were saying, there's probably even more uncertainty coming on the horizon from here. So I think that for that very reason, you're probably going to see the number of companies issuing guidance continue to be very low. And so it's very much about what have companies told you about the trends over the last 4 weeks, and how are they reacting? Are you going to see wholesale cuts in advertising budgets and more layoffs and more cuts to capex and technology spending? Because if that's the case, there's a lot of companies that are going to get impacted by that.
So as you can see, lots of uncertainty, nothing new to what we've been talking about in our class, but these are important indicators and important things to think about in strategic decisions, specifically the strategic decisions we're going to be talking about in the next couple of weeks in regards to capital budget. So I hope you all have a good rest of the weekend. Looking forward to seeing you in class tomorrow evening at 6 o'clock. Be well, everybody, and we'll talk to you tomorrow night.